We are seeing the second consecutive quarterly attribution observation period of pretty strong performance, and that's exactly how I would characterize this. Is it's been pretty resilient, pretty strong, broad growth. It's mostly from what we're seeing, I think, being underpinned by this historic launch of spot Bitcoin ETFs here in the United States. It's just been an astonishing, launch for these products, and I think that's kind of underpinned a lot of this resurgence in animal spirits, and that's despite the fact that we're still seeing some macro headwinds out there.
Hey everybody, thank you very much for joining us for another episode of CFB Talks Digital Assets. We are the home of informed conversation about crypto for institutions building the future of finance. I'm Ken Odeluga, Head of Content, and I'm joined as usual by my colleague, Gabe Selby, who's Head of Research.
Hey Ken, great to be here. Big quarter to discuss, so we should dive right in, right?
Massive quarter, yes indeed, because this is one of those special editions of CFB Talks Digital Assets where we focus in on the recent released CF Benchmark's quarterly attribution report. This is the report that Gabe prepares at the end of an observation period, which includes quarterly rebalancing of our portfolio indices. And using the CF digital asset classification structure, he dives into the markets and basically pulls out the major drivers of crypto markets over the observation period. This period is the December to March 2024 period, and we're going to be looking at the pretty amazing market phenomena that we've actually experienced in this period. So Gabe, animal spirits is a key phrase that seems to be peppered around the quarterly attribution report for good reason. Let's think about that to begin with, and then we get on to the second part where we talk about the macroeconomic picture. Give me some broad brushstrokes of how you would characterize this recent period.
Yeah, I do like the term animal spirits, and we are seeing the second consecutive quarterly attribution observation period of pretty strong performance. From what we're seeing, I think, being underpinned by this historic launch of spot Bitcoin ETFs here in the United States. If you look at just the success of what these products, the achievements that they've accomplished in a short amount of time, I think, at the time of recording, we could say they've accrued, around over 12 billion of net new flows. And that's compared to when I wrote the report in early March, which I think the number was slightly north of 7 billion. So flows are actually kind of picking up into these products. And that's, shown in the AUM, which is also impacted by Bitcoin's strong rise in value. Those figures are astonishing. We've seen now over 61 billion in these products. If you look at it, across the board on what these spot ETPs or ETFs are trading. So I think, that growth has just been phenomenal. It's completely eclipsed the trajectory of other asset classes like the gold ETFs, for example. If you look at Eric Balkunas, shout out to him and Bloomberg, and we had James Savert on in the last episode, but they did a really great table, a month out after these things launched. And you have, I think, 4 out of the top 25 fastest growing ETFs 1 month after launch are these Bitcoin ETFs. And we're proud to be, reference rates for 3 of the 4.
Yeah.
So it's just been an astonishing, launch for these products. And I think that's kind of underpinned a lot of this resurgence in animal spirits. And that's despite, the fact that we're still seeing some macro headwinds out there.
Absolutely. So I'm actually going to get onto that in a second, but I just wanted to, I don't know, basically maybe nail you down a little bit, Gabe, because it looks obvious. It seems obvious.
Yep.
Are we basically saying that we can attribute what we're seeing in the market, which is something that, we all love to see, but are we saying we can actually attribute it to the launch of Bitcoin ETFs? Is that the main driver?
Yeah, I think it's always hard to pinpoint 100% causality, and certainly you have participation across the spectrum here for gainers in our index
Yeah,
in our indices, the constituent gainers. But what does it mean, right? Ask yourself, what does it mean for crypto, for digital assets to have these spot Bitcoin ETFs be so successful? And for me, it's just about it's just like another milestone for investors, for institutions to fully reap, the benefits of getting exposure to something like Bitcoin. And it kind of provides this, I think, stamp of uh, of approval, the stamp of legitimacy, you know, uh, in a sense that we now have a regulated product that can be bought or sold just like any stock or mutual fund or ETF, and through a traditional brokerage account. So that's really important, and certainly the other tokens might be a little ways down the road for them to get the same type of treatment with their own ETPs or with baskets. But right now, that was a really significant milestone for digital assets.
absolutely, absolutely. And I obviously 100% agree with you. There's absolutely no way that anyone who's been sort of half awake during this observation period to
Yeah,
have a different point of view. But as we alluded, there are other factors going on, and clearly, if you look at the broader market, so that's beyond crypto, where we've seen some, pretty major, strong performance across, particularly equity classes. Clearly, there's something else going on.
yeah,
And one of those is a change in sentiment that maybe has been transmitted or mediated, not necessarily deliberately, by the Federal Reserve, which has begun to signal and also, almost by default, by the nature of its, narrative of its policy, has indicated that there could be a change in policy shift as well. So clearly, because we need to pay attention to policy and broader markets in general, the macro picture in general, what can you say about that pertains to crypto? Maybe the rally that we've seen over this observation period and what we might be looking forward to in the medium term.
yeah. The macro picture can certainly kind of ebb and flow in terms of its importance or significance for digital assets, and we've seen, as with the past bear market cycle, how impactful it was. The Fed tightening the rates at the degree that they did. But now we're looking at the macro front and how it's shifted over the past 3 months. Markets were certainly expecting the possibility of rate cuts this month in March, potentially. As we are here now in March 2024, certainly that's not the case. We're seeing robust inflation and income data come in. We just had a CPI report this week that showed used car prices, being kind of stubbornly high. But you also had some silver linings. You look at the owner's equivalent rent, which is a shelter cost component, that's surprisingly softened. So there's still some hope, but basically, you have the inflation side, you have robust wages that's kind of clashing with the case for potentially having any near-term rate cuts in the future, in the near-term future. So, I think the Fed doesn't really know what they're going to do yet. They are very. I mean, if you just listen to what they're saying, it's data dependency.
Yeah.
It's confirmation, waiting to see more improvements towards getting to their inflation target of 2% over a long term, not just on a 1 month probably print.
Yeah.
But if you just accept the fact and you're willing to just kind of live with those terms, that the Fed probably just doesn't know yet when they're going to cut, because they need to see more data. I think that's a fair thing.
Yeah.
To kind of just keep in the back of your mind.
Yeah. I mean, I've definitely heard it. The metaphor, the situation we're in, being akin to the Fed is trying to land a plane, but there's nowhere to land
Yeah.
because the market's on fire. And clearly, if you look at crypto,
Well, that's why it's called the no landing
yeah,
narrative, right?
exactly, yeah. If you look at crypto, that's not going to reassure you that this is a time to be,
Yep.
making greater accommodation. But clearly, joking aside, at the very least, we can say that we're looking at a healthy economy. I don't think anyone can argue that we're in trouble in any way, really. I mean, there are issues. Clearly, there are issues, medium term, long run issues. Some of them are related to the recent sort of dislocation we saw in the macroeconomic narrative where we, had these outsized jumps in inflation, and some of the issues related to that are feeding through. But I think a lot of people would choose what we have right now in terms of the economy than the alternatives, which could potentially be a lot worse. And that's probably a marginal part, a fractional part of what we're seeing in crypto as well in terms of the market action. People appear to be reassured enough to be able to go out on a small limb to buy these Bitcoin ETFs. I think that's the way I'd characterize it. What do you think?
Well, that inflation piece is important, I think, for the core thesis of Bitcoin. And for me, I'm in the firm camp of believing in inflation hedges being observed over longer periods of time versus like a tactical inflation hedge.
Yeah.
A good example of this is if you were to compare the price of crude oil from its peak, I think in like 2007 or 2008. Don't hold me to those dates,
Sure.
but around that time to today, certainly crude oil gets often mentioned as an inflation hedge, and it has done so in some pretty extraordinary or some exogenous shocks, such as when the Russia-Ukraine war started, and the price of crude oil skyrocketed. But since then, it's only traded lower. And if you were to compare it back to that period I was mentioning, it's lower then. So has it actually protected your purchasing power over a longer period of time? Or would you have had to time these entries and exits, almost perfectly to fully, protect yourself over the rising period of inflation? Whereas Bitcoin has, just done an outstanding job in protecting purchasing power, and it's outpaced really only equities are probably the only traditional asset class that protects purchasing power. Now Bitcoin. So you have another lever to pull, another inflation hedge to add to your portfolio. And that's, I think, very powerful for people as you live in this kind of world where you're dealing with inflation every day. You go to the grocery store, you see, higher prices for eggs and milk and stuff like that. So I certainly empathize with the view of, it could be worse. Certainly, I certainly would prefer slightly higher inflation than higher unemployment, right?
Absolutely. Yeah.
But these all I think are related to why Bitcoin now is being considered more of like a quality type asset, right?
Yeah. And, the through the cycle aspect is kind of compelling. I mean, the jury's still out. Clearly, Bitcoin is a matter of, a decade or so old, and oil is, many hundreds of years old in theory. But nevertheless, it's looking good in terms of potentially performing that role. Okay, so let's dive into the details of the QAR for this observation period, Gabe. You've pulled out a number of themes that we can focus on, and you've obviously done that because they've presented themselves as major throughout the QAR period. And the first one that I think we want to look at is equities being what you've described as in price discovery. And you've sort of drawn the comparison to crypto, suggesting crypto may also be in a similar period. What I want you to do, Gabe, before we actually, you get into the meat of that, is can you describe what you actually mean by price discovery? And then let's talk about this broader theme.
Yeah, sure. So during a price discovery phase, that's when the assets are creating, new all-time highs. So they're in a bull market. If you look at any asset value, it technically has to be determined by the dynamic interplay between buyers and sellers. And when you have a chart and you see previous highs, previous lows, or any sort of technical resistance or targets, that is, you would say you're not in price discovery mode. You could say, well, the S&P 500 still hasn't made a new all-time high, so it needs to go hit that target first. Now, since we've, it's been widely reported that the S&P 500 or the NASDAQ 100, both these indices have reached new all-time highs. And since we've written these reports, which observe a period till March 1st, 2024, Bitcoin has now joined them in price discovery mode. So that's kind of what that means. And yes, certainly I can go into kind of like, well, all right, so the S&P 500 is in price discovery mode, the Nasdaq 100 is in price discovery mode, and now Bitcoin, at the time of recording, has now kind of created this, has entered this new phase as well. But what about digital assets? And when we look at digital assets, we want to consider, a broader universe. So we don't want to just talk about Bitcoin or Ether, but we want to talk about all the different segments or categories that make up this ecosystem. And so that's why we have our digital asset classification structure, to allow practitioners to look at these protocols, these blockchain networks from a more purpose-centric type lens, right? So akin to kind of the S&P 500, a large cap index, or the Nasdaq 100, which is, definitely more tilted towards tech companies, our broad cap, has the broadest measure, a most comprehensive measure that of institutionally focused cryptocurrencies constituents. So the reason why I highlighted it is that we're actually still not in price discovery mode yet with digital assets. So we're, at the time of when I pulled the chart up, and we would throw it up here on the video for the viewers, but, they were down so approximately 25% to the November 2021 watermark. So certainly I think it was interesting because there's always this kind of conventional wisdom that you hear from, market professionals, strategists, researchers such as myself, that digital assets typically lead traditional markets like equities. And certainly if you look at the relative performance, you'd say, well, digital assets have outperformed. But in one way, in one category, if you look at the days to recovery to the days of the trough, it took 195 days for the S&P 500 to trough. It's taken it 318 days to finally reach a new all-time high. For the Nasdaq, it was 277 days, and it was slightly shorter at 243 days to reach a new all-time high. For digital assets, they technically were kind of middle of the road. It took 268 days for digital assets to reach a nadir, and we still haven't made new all-time highs. So in that aspect, they're actually kind of lagging a bit, the traditional markets on the equity side. But what I think is kind of constructive is that we still haven't made it yet. So there's a clear price objective for markets to hit, and it was about 25% higher, right, than where they were at in the beginning of the month. So you can view that in a constructive manner and say, well, there's some upside potential there.
Sure. And, do you take the implication of price discovery, as a regime, and comparing that to between equities and digital assets, broadly speaking, maybe measured by our CFB cap index? Do you take that as a particularly beneficent regime, meaning essentially, more broadly orderly market trading with contained volatility and, a clearly identifiable narrative whereby, you don't expect major surprises don't occur. And basically we're heading upwards only, I say only a bit ironically, but this is what when I think about price discovery as a regime, I think this is what characterizes it. And in characterizing it that way, in a way, if you're sort of comparing crypto to the regime that is in sort of traditional risky assets, particularly equities, then are you also suggesting that maybe crypto has entered a similar sort of regime?
Well, for digital assets, we're still not technically in the price discovery regime yet, but I would say yes, price discovery is, I would say, a regime in a sense that some people consider, taking new all-time highs is kind of like, a stamp of approval for declaring a new bull market, right? Often you hear, 20% drawdown on the equity markets is considered a bear market, 10% is a correction. There's all these, I think it can be a little subjective, and certainly crypto
kind of
has,
arbitrary.
a multiple level of volatility compared to equities. So those 20% levels that you would see on the equity market, crypto can do that in a normal correction. And so 20% what to expect when you're in price discovery. Well, just because you've taken now all-time highs, doesn't mean that you're not gonna. It's not like a moonshot. You just
No.
basically shoot up. I think it's very common. It will, be common that you do experience corrections. Those are going to happen. That's healthy. It basically, you should see again a retest, a retracement, and potentially that should be a good buying opportunity. But it's not going to be just a vertical line up, and it hasn't been. Certainly for the equity markets, they've been selling off these past few days given the inflation data. So I think that's kind of what you should expect is, and if you look at the 2021 bull market with our CF Broadcap index, you'll see it had a pretty sizable drawdown before it made new all-time highs. The all-time highs that we're talking about in November 2021, it was trading between, let's just say around like 3,400, and then it fell down to a level of north of 1,500 in just a few months before rising back and reclaiming that 3,500, all-time high level. So it just happens. And I would say just don't expect a hockey stick, right, to the moon. You're going to experience some chop, and that's okay. If you have a good time horizon and a good perspective, a longer term perspective, you should be fine.
So what you're saying essentially, Gabe, that it's almost inarguable that the Bitcoin ETF phenomena and also the palpable demand that we saw emanating from the fact that we now have these vehicles that people are able to buy or are available for trade and sale has had a direct impact on the market, direct positive impact on the market. That's what you're saying, Gabe?
Yeah, and we're seeing this across various markets. So if you think about what spot Bitcoin ETFs mean, they're markets that they primarily target. You could say it's both retail and institutional investors that are primarily attracted to these types of products. These flows have been substantial. They've been historic, and we've gone into that. But what we haven't gone into is how this is impacting the Ether futures market. So I am seeing a lot of spillover, a lot of demand from the spot Bitcoin ETFs now bleeding over to the ETH futures side, which inherently is just much more institutional. It's no secret that you have people like BlackRock, you have all these leading asset managers that have filed, Franklin Templeton, for example, for a spot ETH ETF. These are in the approval queues with the SEC, so we still need to wait and see if they're going to be approved. And certainly right now, investors in the institutional space seem to be piquing interest, right? As evidenced by the open interest, which continues to make new highs since the launch of these spot Bitcoin ETFs.
Sure. And when you say ETH futures, you're specifically, of course, referring to, well, maybe you're not. Maybe
CME.
You're referring to the CME, the regulated CME ETH futures that are settled against our CME CF Ether dollar reference rate.
Yes. Yep.
Let's broaden it out a little bit, Gabe. We've been talking mostly about Bitcoin. We've sort of touched on a little bit of the other markets, particularly ETH. But large cap tokens, the way you've sort of headed this segment of the discussion is large cap tokens keep real yields at bay. Now, why would you say, why would you put those two concepts together? What do you mean exactly?
Well, I think it's pretty well understood that the impact of real interest rates or, Fed monetary policy can have, an outsized impact on an asset like Bitcoin or Ether or some of these large cap tokens, right? So we've seen that empirically over the last rate hike cycle that there was a really strong negative correlation between the two. And so we created a nice chart here, and it shows that. And what I wanted to point out is that there was a significant shift that occurred in November of 2022. That was about 5 months after the U.S. inflation peaked, where the Fed kind of adopted a more gradual pace of rate hikes, where they reduced their typical increases from 75 basis points to 50 basis points. And so a lot of people talk about the decoupling between the macro and the digital asset story, and they sometimes, I think, overlook this important date where in November you had that shift in policy where essentially you saw a little bit of easing on the gas pedal by the Federal Reserve. And that is very, very clear on the correlation statistic where you see it drop to a all-time low, and then it starts to reverse and trend back towards zero. And once you get, above negative 0.05, and you're in that negative 0.5 to positive 0.05 range, I call that the no correlation zone. Basically, the asset doesn't have any meaningful relationship to the underlying. And so far, I think, the large cap tokens have been successful in keeping these real yield dynamics at bay. And in fact, I think, as you see the launch of the spot Bitcoin ETFs, real yields and large cap tokens is, still in that no correlation zone, but it's flipped over to the slightly positive side.
Sure. Would you describe this as a sort of a positive signal? I mean, it appears to be something that, one should strive for. Obviously, you can't strive in the real sense, but it appears to be a positive signal or a positive state, a state that is constructive for continued gains. Would you agree with that?
Yeah, it's constructive. It's uncertain. It's certainly not concrete because correlations are dynamic and they evolve. But you got to continue to kind of monitor this. But right now, it's constructive in a sense that it's not. We're not seeing it be a material factor anymore for driving the performance of large cap tokens.
Let's go now to some specific issues, maybe specific protocols, if you like, because one of the things which stood out to you was the price surge in Ether, enabling Lido TVL to reach new all-time highs. So I think there's a lot in there, Gabe, that probably needs to be broken down slightly, not, obviously briefly, but for you to explain it and explain the importance. So obviously we're talking about Ether, we're talking about Lido. What is Lido exactly? I think that's where you need to start.
Yeah, so Lido's one of the more dominant players in the liquid staking market. Currently, I think they account for around 60% of the market share. And when we look at the DeFi space overall, a metric that we like to look at is total value locked as a proxy for activity. So we want to see how much US dollars are being tied into these types of protocols, these blockchains, whether they're using it for borrow lending, for asset and wealth management, or something like that. We're seeing, a nice recovery in that aspect of that metric, because if you look back from the Terra Luna crash in 2022, that was pretty dramatic, and we're starting to kind of approach these levels again. So what's been kind of attributing to this growth? It's been in this liquid staking market, which has been very popular because it allows users to stake their tokens while maintaining liquidity through these derivative tokens. So instead of locking up, for example, your Ether, which is a major component of staking, you still have the ability to have this derivative token, which gives you access to liquidity going in and out of Ether. So it's a relatively new, I'd say, DeFi segment, but it's becoming increasingly important overall for driving, I think, this metric that we like to look at. And over the past, 90 days or so, we've seen three standard deviation moves to the upside as we've kind of climbed back towards these pre-Terra Luna levels. And so it's been very constructive, and certainly Lido's been a beneficiary of this, and we should definitely keep an eye on the continuing kind of dynamics of this.
Sure. Now let's flip over to the other big standout. Clearly, this has been, in many ways, Bitcoin's quarter, if you want to call it. Generally speaking, it's a quarter, and it has enabled the spotlight to be shone a bit more widely around the Bitcoin ecosystem, to put it really, really broadly. Yeah. And I want you to focus. I see that you're focusing on some other aspects of the facilities available to Bitcoin and the network in general, and that is, of course, layer 2 ecosystems. This is where I think we can bring in the part played by STX within the last observation period.
Yeah, so STX was our constituent leader for the most recent rebalancing period. It rose over 284%, which outperformed the broad cap market by about 221%. We have a good chart that will show that graph. So it's certainly garnering a lot of interest by I think market participants, and that's due to, I think, it's an innovative approach. And we're talking about Bitcoin. We're talking about its big moment in a kind of its big milestone in gaining mainstream adoption. This is the OG blockchain. This is the original layer 1 settlement chain where it's been battle tested over time. And so I think it makes sense that there's a lot of excitement around developers to start to build on it. And so what Stacks is, it's a smart contract layer that's being built on Bitcoin. It's designed to enable the creation of these decentralized apps that we all know and love. And it's just performed quite well. So when I zoom out and look at the bigger picture, I think it's just kind of this ongoing story that we saw, with the previous core attribution report with ordinals. So people started putting NFTs, on the Bitcoin blockchain. And now we're seeing, another popular layer 2 solution like the Lightning Network, which basically creates this big highway for instant and very cheap Bitcoin transactions to occur. And so I think it's natural that we're seeing another avenue open up on in the Bitcoin ecosystem, and that's going to hopefully enable developers to build these decentralized applications that we all know and love. And I think that's just another kind of interesting narrative to follow, because potentially it could unlock a lot of capital if you see Bitcoin continue to kind of evolve and not just be a settlement ledger, but also a settlement ledger for other programmable ecosystems. You could see a lot more interest even going into it further, as it's already kind of gone into the mainstream with these ETFs.
Sure. I will say that's positive and optimistic end to a quarterly attribution report edition that's been positive for a positive and economic observation period. Probably one of the most positive and advantageous that one could hope for, basically. Well, with the launch, the sort of approval and launch of these ETFs, their stunning success, and all signs pointing to a continuation to a large extent of these further beneficial and positive gains. So we really appreciate that, Gabe. That was a great insight into a great quarter. Thanks a lot for writing that and presenting it to us.
Anytime.
And guys, if you would like to hear more of that kind of analysis and those kind of insights from Gabe and others, we do have a long catalog of CFB Talks Digital Assets episodes now, and you can find them on all major podcast platforms that you're into: Apple, Spotify, Google, Amazon, and others. And of course, we started with the written word and we continue with the written word. If you go to cfbenchmarks.com, you can find a whole host of other types of content. You can find the quarterly attribution reports, and also you can find the market monthlies. These are market monthly reports, obviously, that give you a quick update to the sort of most recent trading behavior of crypto. And then, of course, these are interspersed with all sorts of blog posts and the CF Benchmarks newsletter, which will give you a quick color and update of what's happening in the institutional crypto world at that time. Apart from that, we will be back again for another episode of CFB Talks Digital Assets. Thanks for joining us.